Microsoft earnings beat, but why did MSFT stock fall? Microsoft stock slipped in extended trading even after delivering a strong second quarter earnings beat. At first glance, the numbers looked impressive, but investors focused less on the earnings beat and more on the rising costs linked to artificial intelligence. Microsoft reported earnings per share of $5.16, beating estimates of $3.92. Revenue came in at $81.27 billion, also ahead of expectations. A major highlight was Microsoft Cloud revenue, which crossed $50 billion for the first time, reaching $51.5 billion, up sharply from last year. CEO Satya Nadella emphasized Microsoft's expanding AI business. He said the company is still in the early stages of AI adoption and has already built an AI business larger than some of Microsoft's biggest franchises. According to him, Microsoft is pushing the AI frontier across its entire technology stack to deliver more value to customers and partners. The Intelligent Cloud segment, which includes Azure, generated $32.9 billion, beating Wall Street estimates. Productivity and business processes, including Microsoft 365, delivered $34.1 billion, also above expectations. The more personal computing segment, which includes Windows, Surface, and Xbox, reported $14.3 billion, meeting estimates. One key long-term indicator stood out. Microsoft's remaining performance obligations surged to $625 billion, and nearly 45% of that is linked to OpenAI commitments. This highlights how closely Microsoft's future growth is tied to artificial intelligence. So why did the stock fall? Microsoft admitted it is facing AI capacity constraints, meaning demand for AI services is higher than what it can currently supply. This is limiting near-term revenue and forcing the company to ramp up spending. CFO Amy Hood said, Microsoft expects capital expenditures in fiscal 2026 to rise beyond last year's $88 billion, driven by AI infrastructure needs. While Microsoft remains a major AI leader thanks to its early OpenAI investment, investors are becoming cautious about the scale of spending required. The company's market value crossed $4 trillion earlier, but the stock has since pulled back. Over the past year, Microsoft shares are up around 7%, outperforming Amazon, but lagging far behind Google's massive rally. Bottom line, Microsoft's fundamentals remain strong, but rising AI costs and heavy future spending are making investors pause, at least for now.